On this episode of Let's Talk Stock, brought to you by Stock Trek, we will be exploring Rocket Lab and going over the current valuations, the past Q3 2021 earnings, as well as a recap of their last rocket launch. Wow, guys, I am super excited to have seen that last launch. It was absolutely flawless. Rocket Lab nailed it with that one, and Black Sky couldn't be more happier to having 2 more satellites added to their fleet. Which, by the way, be sure to check out my video on Black Sky that's also recently released for Space Day Saturday edition, and you can find that in the description below to go ahead and check out the Black Sky video. Now, my original plan was to, of course, wear the Love at First Insight mission shirt. However, it hasn't quite arrived yet, so I will be celebrating this victory with their Don't Stop Me Now. And let's have a quick review of that Love at First Insight launch that, I just absolutely loved watching. And let me know if you loved watching it too. And as always, Rocket Lab has the coolest launch complex right there in Mahia, New Zealand. You have the beautiful ocean and the water, and I never get tired of watching these launches. Look at that, absolutely flawless. Black Sky will be super happy to see both their satellites up there and functioning fully. So I'm really excited about their next upcoming launch that they have with Black Sky. It's going to be epic. Who knows, maybe they will actually do like the helicopter midair catch on the next one. I would really love to see that. It was really cool that they were able to recover and purposefully, hopefully reuse the last electron from that launch that they just did, from the Love at First Insight launch. And I definitely want to say, if there is anybody of the Rocket Lab team that is watching this right now, congratulations. You guys did an awesome job. Same to you, Black Sky. You all are doing great. Your fleet is expanding, and congratulations to the both of you. And I am a proud shareholder of both of those companies. And next up, the question that some of you have all been asking. Is Rocket Lab overvalued? So let's start off by taking a closer look at its valuations. Now, right here I have the Rocket Lab stock as far as closing day of November 19, 2021. Now, I want you to pay attention to the market cap, which is this number right here. So about 6.96 billion in market cap. And we will be taking a look if I think personally whether or not this market cap is going to be too frothy for Rocket Lab to handle, or if it is kind of middle of the road, or if we are underappreciating it. So moving forward, keep this number in mind. 6.963 billion is the current market cap. Okay, everyone, so why don't you follow me on this trek through Rocket Lab's Q3 2021 investor update report on their Q3 earnings, and we will comb through some of the cool details that it's provided, and then I will give my consensus on whether or not I think this stock is overvalued. Their backlog increased from 141 million to 183 million in the quarter ending of September 30th, 2021. And that is basically a backlog of now 237 million as of November 15th, 2021. So basically, that is about a 30% gain in the revenue compared to the prior quarter ending. So I think that is a nice little jump right there. And that does include, keep in mind that does include the contribution from their acquisition of Advanced Solutions, Inc. And we should offer congratulations to Rocket Lab for recently acquiring Planetary Systems Corporation. Now, Planetary Systems Corporation creates satellite separation components, like the one that you see here called Lightband. They also create satellite dispensary cannons like this one, And those are just a few of the things that Planetary Systems Corp will be bringing to Rocket Lab with this acquisition. Now, I want you to keep in mind that this current acquisition that they have with Planetary System Corporation has not yet closed. They are expecting the acquisition to close in Q4. And also keep in mind, as you've seen before in the previous part of the video where I showed you the projected revenue in the backlog, this Planetary Systems Corporation, their revenue will probably be added into their stream, and I would say about Q1 of 2022 if they close on time in Q4. So we will have to keep an eye on how the Planetary Systems Corporation is going to add to their revenue. It should be interesting, and it is an exciting company that they have acquired with a 100% mission success rate. So I'm really looking forward to more insights on how much revenue this company is going to bring in for Rocket Lab. So as of year to date, as of September 30th, 2021, they have amassed, as you can see here, $34.8 million in revenue as of the part of the 9/30/21. So basically, they're having a 79% year-over-year revenue growth, which is pretty good if you think about it, considering COVID and all the lockdown restrictions that they've had to deal with. Now, their space systems grew 14% quarter-over-quarter, a nice little decent chunk there. And their launch revenue, as expected, with all the COVID restrictions, declined by 88% quarter-over-quarter. So as you can see, this 80% here drop from 7.6 million in revenue to 1.1 million in revenue. Now, what's interesting that I want you to take a look at is let's compare the launch revenue, which is in red, with their space systems revenue, which is in black. So let's first check out the launch revenue for year over year. So the launch revenue in September of the year 2020 was 18.2 million, moving up to a cool 25.2 million by September of 2021. So that represents about a 38% year over year in growth rate right here in launch revenue alone. And now let's go ahead and let's look at the launch in the quarter. So this is a little disheartening, but it's only for this quarter. Keep in mind, with all the COVID restrictions, it'll get better. So in Q2, their launch revenue is 7.6 million, dropping down to that 1.1 million that we see here in this most recent quarter of Q3 21. So let's compare that now with their space systems revenue. So back over here in September of 20, they had 1.2 million in space systems revenue, and jumping to September of 2021, they have 9.6 million in revenue. So from here to here, we have a 698% year-on-year growth rate. Now, I don't know about you, but 698% growth rate from here to here, that is awesome. I mean, that's an awesome job. Between, their additional acquisitions that they've recently acquired with the Planetary Systems Corporation, imagine how much even more this is going to jump. Now, also, Rocket Lab aims to have 40% of its revenue generated to be coming from space systems by the year 2027. Now, that would make sense when you are looking at these graphs and you see already a jump of 698%. And as far as the space systems revenue quarter over quarter, here we have in Q2 21, we have 3.7 million, jumping to 4.2 million in the third quarter of 21, which brings that right up here to that 14% quarter over quarter growth, which is really awesome, considering everything that's been going on with COVID. And plus, it's not all their acquisitions will be factored into the space systems yet. You have to think of the Planetary System Corporation. They'll be closing that, as I mentioned, by the Q4, and hopefully we'll be seeing some of that revenue maybe even in the Q1 report of 2022. So we'll have to see about that. Check out the income and the adjusted EBITDA. Now, the EBITDA is going to represent earnings before interest, taxes, depreciation, and amortization. So let's go into this here. So in September of 2020, their net income was negative 36.1 million. And coming in here into September of 2021, we see a big jump here to negative 120 million and a half. And I believe that is due to, COVID restrictions and all that jazz. So that is to be expected. It's unfortunate. It's about, a 233% increase. But I do believe that that is going to level out in, the next coming up couple of quarters. Now, when we look at the adjusted EBITDA, it was negative 28.4 in September of 2020, going to negative 35.6 in September of 2021. So that's about a loss, as they mention up here, of about 25%. And again, from the effects of COVID restricting the launch cadence, which that was to be expected. Now, their, adjusted EBITDA was, suggested to be in the range of 17 million to 20 million, and they actually averaged out to an actual 17 and a half. So that's actually at the low end of what they thought it was going to be, which is actually a positive thing. And, they were pretty spot on and pretty clear with their guidance. So that's also a good thing to see. Now, keep in mind that a lot of this, on top of the COVID restrictions, this drop in everything here is also a result of the warrants expense on the market, as far as the also the Q3 2021 de-SPAC related stock-based compensation charges, and also acquisition costs related to the ASI and the PSC. However, those were only about 0.7 million in that quarter, and then also 3 million in interest expense from the first full quarter impact of the term loan with Hercules. Now, I don't know if you know much about Hercules, but Hercules is actually a kind of like a venture capitalist loan company. They initially committed 100 million in venture debt financing to Rocket Lab in June of 2021, and they also seem to be dabbling with other space companies as well. You have Planet Labs that they've also loaned money out to in venture capital, as well as the Velo 3D, which also I believe they make 3D components that SpaceX has utilized. So that particular loan company, Hercules, seems to be dabbling a bit in the space industry as far as loans. And let's check out the gross profit margins here. I want to check out the year over year. So in September 30th of 2020, they were negative 40% gross margin. And then come around in September 30th of 2021, they're negative 25%. So that from negative 40 to negative 25 equates to a profit margin increase for Rocket Lab of 37.5%. So they gained 37.5% of profit margin from the last year compared to 2021. And I think that's awesome. And I think that they're going to continue to, bring that margin even closer and, eventually become profitable. So this is a clear sign here that, they're doing a great job as far as the gross margins. Got their future financial outlook. So their next quarter, their quarter 4 2021 revenue outlook, they expect the revenue to range between 23 and 25 million. I like to go in the middle. Let's just say 24 million. And that does not include any contribution from Planetary Space Corporation, as the deal has not closed, like I mentioned earlier. So we probably won't see any of that till Q1 of 2022. So depending on that. Now, what's interesting here is that from the prior revenue of Q3, this past one of 5.3 million, to their projected of, let's say the middle here, 24 million, that would represent a 352% positive jump in revenue from Q3 to Q4. Which I think is that's really wonderful to see that 352% jump there, because keep in mind the last quarter was a bit bleak due to the COVID restrictions and affecting the launch cadence. So, and even if we were to compare Q2 of 2021 with this Q4 here, so even though quarter three, was a bit of a bust as far as the launches, Q2 had a little bit better cadence, and even if we compared Q2 with this projected 24 million for Q4, that's still an increase of 112%. Which, if you ask me, I think that's pretty darn good. So the expected gross margins are expected to be 13%, which that's looking quite positive there. And, comparing it to the last gross margins of like negative 25%, it's nice to see their projection for something in the positive. So I'm excited to see how that turns out as far as gross margins in Q4. So definitely looking forward to that. And I guess you could say in a way, they're literally closing the gap, if you know what I mean. I took a little walk down memory lane. And their financial outlook for the future of quarter three, this was done back for the quarter two report. They said, expect quarter three revenue of approximately 4 million to 5 million, which has been impacted by the COVID-19 level alert and lockdown in New Zealand after the Delta variant outbreak, resulting in no further launch activity planned in the quarter. Now, here is what I like so much about the Rocket Lab team is that, as mentioned, they expected between 4 and 5 million. And for quarter three, they actually delivered 5.3 million. So actually over that high point of 5 million. So they delivered 5.3 million for quarter three as far as revenue. And I think that's amazing that, they give pretty close guidance and usually overachieve it as far as their estimates. So I like that they don't exactly try to inflate their projected numbers too much. They tend to keep it real, and that's what makes for a great company to invest in, is that it makes their numbers believable, and it makes you feel safe in knowing that, what they're telling you is usually spot on, and in fact, they usually tend to underpromise and overdeliver. And I've mentioned that before in a previous video that I did, Is Rocket Lab a Good Investment?, where I talked about how Peter Beck is the type that tends to, keep a tight lip. He tends to underpromise and overdeliver. And I like that, compared to other more flamboyant CEOs out there that just, like to tell you that they're going to go to the moon and then they never left Earth to begin with. So, this is a good sign as far as, how the company delivers itself to its shareholders. So, the moment you've all been waiting for, is Rocket Lab currently overvalued? Well, let's take a look. It depends on which side of the coin you are going to choose. So, with a market cap sitting at about 6.9 billion. So, we could look at this in two different ways. We can look at this by their revenue that they've had so far year to date as of 9/30/21, or we can look at it based upon, their backlog revenue. So, let's check it out. So, with a revenue of year-to-date of 34.8 million, that would give them a PE ratio of a whopping 198 times moving forward PE. So that is quite a whopper. However, if you look at it this way, if you decide to check out from their backlog revenue of 237 million, with a 6.9 billion market cap, that gives it, based on backlog, a PE ratio of about 29 times earnings. So it's some people may think that that's high, but it really depends on how you look at it. I mean, right now Apple's current PE ratio is about 28, so very close to the PE ratio if you're going to base it on, their future revenue and their backlog. So it depends on how you look at it. It could be two ways. It could be super frothy if you're looking at just simply for what, they've done versus for the future potential of what they have to offer. So let me know what you think in the comments below. Do you think that this is a bit frothy? What's your take on it? I like to see other people's remarks upon this, as I do know that everybody has different opinions on what they consider to be frothy, on what they consider to be overvalued, or what they consider to be, a hidden gem, that people might be overlooking because they think it's too frothy when really it still has potential for massive growth. So let me know what you think below in the comments about this two coins of the market cap, whether, the year-to-date revenue or the backlog revenue, PE. So be sure to leave a comment below and let me know what you thought about that last launch and also about the current valuation. And also be sure to click the like button if you watched the last launch, Love at First Insight. Let's see how many people watched it with me. So until next Space Day Saturday, live long and prosper.